Our guest has 3 plays in the mining sector. We're joined by Wayne Lamb, analyst and director of mining research at TD Securities. Wayne, great to see you. Thanks very much indeed.
Yeah, thanks for having me on.
Are investors wary of mining stocks, not golds, but of copper stocks right now, given the threat to the economy with this trade war?
Yeah, definitely. There's a lot of geopolitical uncertainty right now and potential negative economic impact on the trade war. For sure, on the gold side, we continue to like gold as a safe haven and diversification of portfolio for investors looking to, for a safer home for their capital.
You're going to take us to Papua New Guinea with your first idea, K92 Mining. What's the attraction here?
Yeah, thank you. K92 is our top pick in the gold space this year. This is a company that operates a tier 1 asset in PNG with a lot of exploration upside. They've also had a lot of operational momentum, a very strong back half of the year last year. They printed 17 gram a ton gold in Q4, and that kind of highlights the high grade nature of the mine. They also have a brand new stage 3 mill coming online in late Q2 this year. That's going to take the run rate production levels from 150,000 ounces gold equivalent to 300,000 ounces and beyond 400,000 ounces with the next stage 4 expansion. So a lot of exploration upside here, a number of new discoveries at Arakompa, high-grade dilatant zones, and we still view the valuation as pretty attractive here, 25% discount on NAV, and so attractive level for investors to kind of enter into the name here for exposure to a tier 1 asset.
Are they high cost? I guess sometimes people in times of strong gold prices look for high cost gold miners because they want extra leverage.
They are a little bit higher cost this year just because they're spending and investing a lot of sustaining capital into the underground development. Mm-hmm. But ultimately, this will be a very low cost mine and a tier 1 asset globally.
Right. Your next idea, Endeavour Mining, and they're huge. They're a dominant player in gold in West Africa.
Yeah, Endeavour Mining. This is a West African operator with a first-class asset portfolio. 2 brand new growth projects this year that they're ramping up with the Massawa Biox plant and at Lafigué in Cote d'Ivoire. That's going to drive strong free cash flow. And they've also been a very strong dividend payer, 225 minimum dividend, strong shareholder returns alongside an ongoing buyback program. We have valuation here at a 20% discount on NAV, 35% discount on EBITDA. And we think that's an attractive level for investors able to take on some West African risk.
And then finally, Kerr Mining. They, of course, are working on that. I'm not sure if that deal, the Silvercrest acquisition, has gone through yet. What's the attraction with Kerr Mining?
Yeah, Kerr Mining. This is a silver producer, and I just highlight the work that our commodity strategy desk has done. They've really been bullish on our house view on silver, just given the structural deficits that we see, along with depletion of inventories that could support higher prices. So Core is the one that we like for silver exposure in the space. They're ramping up 2 projects this year with Rochester expansion and the recent closing of the Silvercrest transaction. That's going to drive 30% production growth this year and 5% lower costs. And ultimately, we see a pretty strong free cash flow inflection point in Q2, which is going to drive delevering of the balance sheet. The stock has pulled back a bit post the closing of the Silvercrest transaction, and we think that's an attractive entry point for investors looking for exposure to silver.
Why do you think investors or some are wary of the deal?
I don't know if they're wary of the deal. I think they just used Silvercrest as their exposure to silver and then had to reevaluate, the investment thesis for Core. Ultimately, I think, perhaps there's some hesitancy around these ramp ups. Rochester, that expansion is still in the ramp up phase, and perhaps investors taking a little bit of a wait and see approach before jumping back into the name.
Finally, what's your take, Wayne? Now that gold has topped 3K, I know predicting gold prices is a mug's game, but do you see much more upside?
Yeah, we certainly think that gold prices could sustain these higher levels. We still see very strong central bank purchasing, a lot of geopolitical uncertainty in the market, obviously, with the trade war headlines, and we see gold as still something to own as a safe haven for diversifying your portfolio.
We'd better jump. Wayne, thank you very much indeed for joining us.
Thanks for having me.
Wayne Lamb, analyst and director of